So I'm going to just see if we can draw some channels here and see what's actually been happening on this currency pair, and we'll just kind of break this down. So what I'm doing with this is I'm just trying to find at least 2 touching points that have a good line of fit that I can also confirm work down here as well. So that looks pretty decent to me. Even if you doubled that up, it's quite good. So that's kind of your channel, and we are basically in the middle of that. Now what we can do is we can just take this and push that down as well, and that will just give us some extra hidden support and resistance lines that the market might hold on, like that. And that's where we are. Now I will just also have one more little look here, just kind of see how the market likes to move. So that's quite a nice little angle. Look at that, really nice, acting as support. So we can use this as an extra layer of support as well, right there. And let's see if there's anything else that's got any use here. Okay. So with that kind of in play, I would say right now, kind of looking at that, it looks like a down channel that could break. So we're going to go look at that daily chart. But for me, this looks like an opportunity where potentially we could look for a buy. Now, if we can, let me see if I can connect this, and we'll make this a different color. So we've got a couple of points there. We'll make this one yellow. I quite like that. I'll tell you what I like here. If this is going to break higher, we almost want the news not to be as great tomorrow, so we can get pushed down. So what you can do is you could take this high to low, and we'll find out where the Fibonacci is. So I'd like to see where the 618 comes in, and that could be a nice little buy point for us. That comes in around there. So that is around 63.70. Let's stick a line in there. So about there. So you've got, that's quite nice. You can see that it's quite a nice reactive line of resistance, of support, resistance. It's a good little line, that 63.78. So that looks like a nice, interesting area. That's somewhere there, or a slightly lower. So between 63.50, 63.78 could be a nice buy zone. So what I'm going to do is I'm going to see if we can go over to a daily chart, if I can. Over here. I'll bring in MT4 now. And let's have a little look. So 60, yeah, I quite like that. I'll tell you what I like about this as well. That's quite good. Let me get my pen out. Right here. What I like here is if you kind of look at this structure going down, you've got these moves. So if you see here, like these high points were kind of continuously, generally lower highs. And these lows here were lower lows in general. Okay, there's a bit of consolidation there. It's another low. And it's the first time we've kind of broken through that high. So it feels like this is a potential buy. So it obviously it can go up from anywhere as long as it doesn't take out that low. So that's quite that's a good sign for potential bullish price action. So 63.70 to 63.50 look like potential buy zones. Now, there's a few other things that we can do here. If I just take it over here to 4-hour chart, if I can. This is cable. So zoom out. Right, so let me see. Yeah, that looks nice. I'm just going to draw the channel on here as well. I can get my drawing tools out. So we'll draw another channel line here and see if there's been any kind of breakout yet. So that's the sort of, that's about right there. See, that's a quite nice fit. So we'll right click on this. We'll make this extended. So that's interesting. We had that, well, I guess you could take that as a double line there. So at the moment, we have failed to break above. So if you were to buy this on a pullback, you're basically, like you can see there, that's a nice resistance. That's kind of falling in within our zone. So anywhere like these sort of areas here with a stop somewhere there represents a good entry point for this to potentially buy. Now, one thing that I'd say here is because you are buying with the expectation that the channel is going to break, I wouldn't go full risk on this one, because the reality is that we are trending down. We're channeling down here. So we're anticipating that the market might rally. And if you do pick it up here, somewhere here, I think you can expect to get something like that. A nice little push up towards these sort of highs up here. And if you want to kind of, do smaller targets, you can use the Fibonacci on the 4-hour chart. So if we think this, I hope I've got it installed. Yeah, I do. So if this market, for example, was to go up from here and it didn't pull back any further, then we'd expect this market to kind of find an extension here to here between these two levels. And that's absolutely possible. So the tricky thing right now is if you buy here and the news goes against you, there's a good chance you're going to get stopped out. And that's what makes it tricky. So my preference would always be to get in. So you want to put your order in tomorrow and see where we are. So what might happen today, which would be quite bullish, is this market maybe will stay around here. So it won't go down necessarily. Maybe it will form like a flag, for example. In which case, you've got to then make a decision. Do you want to buy this before the news, or do you want to wait until after the news? If you wait until after the news, you essentially probably miss the move, the original move, and then you're going to be looking at basically pullbacks. But the problem is if you don't buy before, you're pretty much hitting our target. If you have a look here, what this target is, you've got a target here of 65.86, an official one, and then an upper side target potentially if it has an overextension of 66.37. So let's take those numbers and put them into our chart over here. 65.86 is there. Can you see that? That's literally where we were targeting. So it's essentially, what does that all mean? Okay, let's break that down. What it basically means is on something like this, you either have to, well, we're pretty much saying you're going to have to take the trade before the news if you're going to catch the move up. Now, obviously, if it goes the other way, then you could catch it on a move down, but then it's a completely different play. So it's not buying well, you could buy at this level, but with something like the news that's coming out, it could be a really big move. Something like retail sales, for example, it makes sense. You could stick a limit buy there, and you could say, okay, people have over exaggerated it, this market's going to go up because the weekly time frame is telling us it's going to go up. With something like this, it's not really the case. So I think this one's a tricky one to play. I think you can play it with low risk, but to make your numbers work, remember, like if you're buying here, for example, so you're not waiting for a pullback and you buy here and it flags, which it could do, similar to what we said before, Gavin, where the market might just wait for the news. If it does do that, then you're hoping that there is a hike tomorrow and it breaks out. Otherwise, if there isn't, the market will drop. And where will it drop to? Well, you will possibly drop to the 1.5 DTR, which you can use again to fade. But then again, that's a different strategy. So if you're going to take a trade like this, basically in summary, I would do it on low risk. But at the moment, I wouldn't put an order in personally on this one. If, like I said, if it holds here and you look at it tomorrow and it's here, you could potentially take that risk. But you're going to probably need to do, if your target's anywhere in this block, you're probably going to need to put a similar size stop to start with. So your stop will probably need to be somewhere like there. And then if the market does go down, you could average in. So it's a bit more advanced. So if you did a 0.25% here, right? And then you said, okay, well, if the market goes against me, I'm only losing a 0.25%, but maybe if we hit the 1.5 DTR, which is our extreme, or if we hit this level, I add another quarter. And then if we hit the 1.5 DTR, I add another quarter. But again, this is a bit more advanced. This is for people that are trading already, that have some knowledge of the markets and understand how to do that. If you are new, then don't do that. Just watch the market, play it on a demo account and just see what happens. But yeah, that's kind of all I've got really. Sorry, there's nothing better than that, but obviously I can't give you a setup if it's not. You know.
Yeah, and this is interesting though, because it could be a feasible setup for a day trading option, trading news fundamentally. Just to put this into a category, would you say that this would be a breakout trade if it did happen?
This would be, yeah. But the thing is that you're getting in before the actual breakout. Now, there is something you can do, but it's really tough.
Alerts going off on Aussie Jappy again.
Yeah, no, there is something you can do, which is you can plug into a news feed and you can get real-time alerts of when the news comes out. So there's things called squawk boxes. So this is for very active traders, but you've got to remember that you're trading against institutions, algos that pick up information, whatever happens, way quicker and interpret it quicker than you will. So yes, it's quite useful, but to trade off it, it's going to be really tough. And they've got to take into account the liquidity, like the slippage. So if you try and buy off the back of what you've heard on market, you can get slipped and you can get really bad price entry. So in general, I wouldn't recommend it. I'm just making you aware that that's another option, a squawk box, which does require you to pay for that service. It's like a real-time news feed, and it kind of tells you when things are coming out that you haven't heard about. So if one of your currencies is moving and you've no idea why, if you have the squawk box, you'll always know why. But
awesome.
Yeah, that's it. Yeah.
That's thanks for clarifying that. That's the possible pro trade setup of the week. Obviously, the style and the philosophy here is to find low risk, high probability. So there probably could be much more higher risk options that you could take, but that's not what we're about here at the London Trading Institute. So yeah, that's a potential for a low risk, high probability, depending upon the news information that comes out tomorrow. So if you're interested in that setup and looking at it further, then the Kiwi Swiss will be the currency pair for you to take a look at and keep an eye on tomorrow when the news comes out. So that is it from us. That's another hour done and dusted. These hours go so quick, especially for a Monday. It's pretty crazy.
They do. And I think the just on a final note, like, I think the important thing is that you don't have to take every trade that you analyze. You have to feel confident and have some conviction about the trade that you take. And if you don't, you just have to let it go sometimes. So like for something like that, my preference would be to let the news come out, see what happens, see if there's any reaction, and then plan a trade the way we described it. So you can use the analysis after the news if it's still relevant, because maybe you get a little up and down move, it goes as expected, and then you look for the buying opportunity where we suggested. So you don't have to trade something. You want to trade something that meets your plan, your criteria. And that's the only way you're going to grow your account consistently.